Welcome to the Deep Dive. Today we're diving deep into Marico Ltd's Q3 FY25 performance.
Oh, yeah, their January 2025 update. I took a look. Pretty interesting stuff.
Yeah, it's packed with insights.
For sure.
And, we're talking about one of India's leading consumer goods companies here.
Yeah.
So understanding how they're performing, it kind of gives us a peek into the market's overall health,
Yep, absolutely, yeah. It's a good snapshot of what's happening in a really dynamic period for them. I mean, remember their reporting period ended December 31st, 2024. Right when the global economy was experiencing all sorts of changes.
Talk about timing. But, okay, first thing that jumps out at me, at least, is their revenue growth.
Uh-huh.
A whopping 15% year over year.
Impressive.
That's not just growth. That's their highest in 13 quarters.
Yeah.
So I'm curious, is this just a rising tide lifting all boats, or is there something more specific to Marico's success here?
I think it's definitely more than just external factors. You know, their India business, which is really their core, right? Yeah. That saw a 6% volume growth. So that means they're actually selling more products.
Right.
It's not just price increases. And you know what? That's also a 13-quarter high for them.
Wow. Okay. So they're clearly moving in the right direction.
Yeah.
But I got to ask, volume growth sounds a bit technical. You know?
Yeah.
What does that really mean for, say, someone who's considering maybe investing in Marico?
Think of it this way. Imagine a company that sold like 1 million bottles of shampoo last year.
Okay.
This year, they sell 1.06 million bottles.
Right.
That's a 6% volume growth.
Okay.
It shows real demand, you know.
Okay, so it's not just a price hike making things look better.
Exactly.
Got it. So people are actually buying more Marico products. That really says something about their brand power, doesn't it?
Absolutely. And it's not just that they're holding steady, they're actually expanding their reach within India. Over 90% of their domestic business either gained or at least held on to their market share. And almost 80% either gained or maintained what we call penetration, the number of households actually using their products.
That's impressive, especially in a market as big and diverse as India. But their success is not just limited to India, right? They've been making moves internationally as well.
That's right, yeah.
Yeah.
Their international business actually had a 16% growth.
Wow.
In constant currency terms.
That's really impressive considering all the currency fluctuations and headwinds that can impact international businesses.
Yeah.
They're proving that their strategy, it's not just about India, it's about global appeal.
For sure.
Now, this is where I get curious.
Yeah.
We've all seen those headlines about rising commodity prices globally.
Yeah.
How is Marico handling that, especially with a key ingredient like copra?
Right.
Which they use in their famous parachute coconut oil.
That's a good question. You know, as an investor, that's something you always want to think about. Can a company handle these ups and downs? And, well, despite a pretty big jump in copra prices, their Parachute Rigids brand, that's their flagship coconut oil, they still managed to grow volume by 3%.
Okay.
And they even increased their market share by, get this, about 140 basis points.
Hold on. Back up a sec. Basis points. For listeners who maybe aren't familiar with the financial lingo, can you break that down?
Sure. It's just a fancy way of saying 1/100th of a percentage point.
Okay.
So 100 basis point increase, that's the same as a 1% increase. They're usually used when talking about small changes, especially in interest rates or, like in this case, market share.
Ah, got it.
Yeah.
So even with higher costs, they managed to raise prices and gain more market share?
Yep.
But that makes me wonder, aren't they worried about pushing away customers with these price changes?
Yeah, it is a delicate balance. And actually, the report does mention that they're being cautious about further price hikes.
Makes sense.
They're very aware of how price changes affect consumers, especially in the short term.
Yeah, especially in a market like India. You don't want to risk losing those loyal customers.
Right.
Now, speaking of balancing acts, how did their other major oil brand, Saffola, handle the rising vegetable oil prices?
Well, Saffola held its own with low single-digit volume growth, which, considering how volatile edible oil prices have been, that's not bad.
Right.
What's even more impressive is their 24% revenue growth, which is largely driven by, well, smart pricing adjustments.
Okay, so both of their big oil brands, Parachute and Saffola, they've weathered these price challenges fairly well.
Uh-huh.
But we know Marico isn't just about oils. They've been diversifying, haven't they? Tell me more about that.
Absolutely. Their diversification, that's a big part of their story. Remember their value-added hair oil segment?
Yeah.
Well, it had some struggles earlier, but now it's showing signs of a rebound, especially those fancier oils, the mid and premium segments, the ones with added benefits. And that actually helped them gain about 70 basis points in market share.
Wait, so they're selling more expensive hair oils and gaining market share at the same time?
Yeah.
That's interesting. What's driving this recovery?
Well, they attribute it to a mix of things, like their advertising, the jingles, celebrity endorsements, and some, smart brand activations. But a key factor here,
What's that?
a general improvement in rural sentiment.
Oh, that makes sense. The economic conditions in rural India, that would obviously have a big impact on a company like Marico. And their diversification, it's not just in hair oils, is it? They've been making moves in the food business, too.
Oh, yeah, big time. Their foods segment, that saw a remarkable 31% year-on-year value growth.
Wow.
It's actually nearing, get this, a every euro 1,000 crore annualized run rate just in Q3.
Okay, so if they keep selling at this pace, they're going to hit like 1,000 crore in revenue every year just from their food business.
Right.
That's huge.
Yeah, and that includes their Saffola Oats, which is enjoying double-digit growth, and some newer brands like True Elements and Plix's plant-based nutrition stuff.
Okay, so they're not just riding on the success of their classic brands, they're actively building a new generation of winners. This diversification story has me hooked. What else is going on?
Well, they're not stopping there. They're also diversifying their personal care portfolio, but they're doing it in a really interesting way. They're focusing on digital-first brands.
Digital first. Now that sounds intriguing. What does that actually mean when we're talking about consumer goods?
Think of brands that were born online.
Okay.
They really target those consumers who are constantly on their phones, browsing social media, shopping online. Brands like Beardo, men's grooming, just herbs, natural skincare, Plix. They're doing personal care stuff.
So they're tapping into the huge e-commerce boom in India.
Yeah.
Smart move. But the real question is this digital-first strategy working? Are they seeing results?
The numbers speak for themselves. The combined revenue from all these digital-first brands is on track to hit an annualized run rate of like 600 crore just in Q3.
Wow.
They're exceeding expectations. And here's the kicker. Beardo is actually on the verge of achieving double-digit EBITDA margins this year.
Whoa, hold on. EBITDA margins.
Yeah.
I think we might need to translate that into plain English for some of our listeners.
Right, you're right. Let's simplify. EBITDA margin, it basically tells you how much profit they make for every rupee of sales.
Okay.
Double-digit EBITDA margins, that's a sign of a healthy, profitable business.
So Beardo, it's not just a trendy brand. It's actually making serious money. That's a huge win for Marico's digital-first strategy. It's not just hype. It's translating into actual profits. So what does this whole diversification tell us about Marico's overall approach?
It shows they're not just reacting to market trends, they're actively shaping their future. The combined revenue from their foods and premium personal care segments in India has already reached about 21% of their domestic business, and that's just in the first 9 months of FY25.
So they're not just dipping their toes into these new areas, they're making a real commitment.
Exactly.
They're building a more diverse and resilient business.
It's like, spreading your bets, like in poker. It reduces their reliance on any single product or market, makes them less vulnerable to sudden changes.
Speaking of reaching new markets, I noticed they mentioned something called Project Set 2 in their report. What's that all about?
Oh, Project Setu is their plan to expand their direct reach to consumers. They're basically cutting out the middleman in certain areas, and as of Q3, they've rolled it out in 11 states across India.
So it's like, I don't know, skipping the big grocery store and going straight to the farmer's market.
Yeah, kind of.
Fresher produce, often at a better price, and you're supporting local farmers directly. But in this case, Marico is building their own distribution network. What's the strategy behind that?
Well, it gives them greater control over their supply chain, right? Which means they can get their products to consumers more efficiently. It also helps them build stronger relationships with customers, especially in areas where traditional distribution channels, they might not be as effective.
That's a smart move, especially given how big and complex the Indian market is. But of course, no success story is without its challenges. And for Marico, one of the biggest ones seems to be those rising input costs we talked about earlier.
Right, and we talked about copra, but they're also dealing with rice bran oil prices going up almost 19% year-over-year.
Ouch. How are they managing this cost pressure? Are they just absorbing it, or are they taking action?
They're definitely not just sitting there. They're actually using a two-pronged approach.
Okay.
First, they're focusing on volume-driven revenue growth,
Right.
basically trying to sell more products to offset that higher cost per unit.
Okay.
It's a classic strategy.
Makes sense. Sell more, spread the cost, keep things moving. Yeah. But that can't be the whole story, can it? They're also raising prices, right?
Yeah, of course. But they're being strategic with their pricing power, raising prices where necessary, but doing it carefully so they don't scare off customers. It's a delicate dance, especially in a price-sensitive market like India.
Sounds like they're walking a tightrope, you know? Yeah.
They need to keep those profits flowing while making sure their products stay affordable. But so far, they seem to be doing a pretty good job.
They are.
And despite all these challenges, they're actually pretty optimistic about the future, aren't they?
They are, surprisingly.
That's surprising, given all the headwinds they're facing. What's fueling their optimism?
Well, they're banking on a steady demand trend in the coming quarters.
Right.
They think that recovering rural sentiment we talked about and stable consumption in urban areas will support that. They seem confident that people will continue to buy their products, even with some price adjustments.
Okay, so the overall demand picture looks promising. But what about their specific plans? Where are they focusing their energy to, really capitalize on this positive outlook?
Well, they're highlighting a few key areas. First, they want to improve growth in their core domestic categories.
Yeah. Strengthen their base camp before climbing higher. And they're planning to do this by supporting their existing network of distributors and shops, what we call general trade, and expanding their direct reach through Project Set 2.
Got it. So bolstering existing channels while also creating new ones. Smart. What else is on their agenda?
Well, they're also planning to push for faster growth in their more urban-centric and premium portfolios, those higher-end products that appeal to a more affluent consumer base.
Right.
And they'll be leveraging organized retail and e-commerce channels for that, which makes sense given the target audience.
It's all about finding the right channels to reach those customers. What about their plans for their food and personal care segments? Those exciting new frontiers they've been exploring.
They're not slowing down. They're committed to investing and diversifying in both their foods and premium personal care portfolios. They're aiming for significant growth in both segments. That tells you they're serious about building a future where these newer categories play a major role.
So they're not just playing it safe, they're going for it.
Yeah.
That's a bold move. And what about their international business? Any ambitious plans there?
They're aiming to maintain double-digit constant currency growth in their international markets. They clearly see a lot of potential beyond India and are putting their money where their mouth is.
Wow, we've covered a lot of ground, and that's just part one of our deep dive. Marico's story is fascinating. It's resilience, innovation, ambition. They're facing challenges, but they're also not afraid to take risks.
Yeah.
I'm hooked. What's next?
Well, now that we've gotten a taste of their strategy, let's get into the details of their financials in part 2. We'll dissect their profit and loss statement, explore their margins, see how those rising input costs are actually affecting their bottom line.
Get ready to really deep dive into the numbers. Welcome back to the deep dive. We're getting down to business, the numbers.
Yeah, time for some financial detective work.
Right. A company can tell a great story, but the numbers, those don't lie. So where do we start our investigation?
Well, their consolidated profit and loss statement, or P&L, that's a good starting point. Gives us the big picture, revenue and expenses.
Okay.
And right away, we see their revenue from operations for the quarter. That was 2,794 crore.
Okay.
A 15% jump compared to last year, the same period. And for the first 9 months of fiscal year 2025, their revenue hit 8,101 crore, a 10% increase.
Okay, so their revenue it's definitely going up.
Uh-huh.
But revenue is just one piece of the puzzle.
Right.
What about their profitability? Are they actually making money from all this growth?
That's the question, isn't it? And while their revenue is impressive, their EBITDA, that stands for earnings before interest, taxes, depreciation, and amortization,
Right.
it tells a slightly different story. For the quarter, their EBITDA grew by a more modest 4%, reaching 533 crore.
Okay. So their profit growth isn't quite as stellar as their revenue growth.
Yeah.
Why is there a gap? Shouldn't they be making more profit if they're selling more?
Well, that's where things get interesting. Their EBITDA margin, which basically measures how much profit they're making on each rupee of sales, that actually decreased by 210 basis points year over year, settling at 19.1% for the quarter. And for the 9-month period, it contracted by 70 basis points, reaching 20.8%.
Wait, so they're actually making a bit less profit on each rupee of sales, even though they're selling more overall? Doesn't that kind of contradict their optimistic outlook?
Not necessarily. Remember those rising input costs we talked about?
Yeah.
They're definitely having an impact. Their report actually breaks down what's affecting their margins, and a big one is that increase in material costs.
Right, that includes like everything from raw materials to packaging.
Exactly. And this cost jumped by a hefty 20% year over year for the quarter.
Okay, so those rising prices for like copra and rice bran oil, they're really squeezing them.
Yeah, it's like running a marathon with a weight vest.
Yeah. And they're not just dealing with those external cost pressures, right? They're also investing a lot in their growth.
Right. They're spending on advertising and sales promotion. That went up 19% year over year for the quarter.
Yeah, they're spending more to, keep those brands in the spotlight and launch those new products with a bang. But can they keep this up? Can they maintain this level of investment while, their margins are under pressure?
That's the question. It's a tough balancing act. But their outlook statement, it gives us some hints. They're really emphasizing their focus on boosting efficiency in their core domestic categories. Sounds like they're looking for ways to, streamline things, maybe cut some costs, free up some resources for growth.
So it's like decluttering your house to make room for new furniture.
Exactly.
Get rid of the stuff you don't need and focus on what matters. But isn't there a risk with cutting costs?
Yeah.
What if it, affects the quality of their product?
You're right, it's a fine line, but they're not just slashing everything. Remember Project Secu, their initiative to expand their direct reach?
Right.
That's another way they're trying to improve efficiency and maybe even reduce those costs tied to their traditional distributors. By cutting out the middleman sometimes, they can streamline their operations, potentially boost their margins.
So it's not just about cutting, it's about being smart with their money.
Yeah.
Investing in things that deliver value over time.
Sure.
But ultimately, their success hinges on more than just cost management, right?
Yeah.
They also need to make sure those growth initiatives are actually generating a good return.
You got it. They can't just throw money at new products and hope for the best. Those investments need to pay off, Those new brands need to gain traction and contribute to their profitability.
And to make things even more interesting, they're operating in a consumer landscape that's constantly changing.
Oh, absolutely.
What worked yesterday, it might not work tomorrow. How are they adapting to these shifts, especially in a market as dynamic as India?
It's a crucial point. Consumer preferences, they're changing so fast, driven by things like e-commerce, the growing awareness of health and wellness. People want personalized products and experiences. It's a lot to keep up with. Imagine trying to hit a moving target while juggling flaming torches,
So Marico's facing this double whammy: rising input costs and ever-changing consumer demands.
Yeah.
It's a challenging situation,
For sure.
but also potentially very rewarding.
Yeah.
They have this strong foundation with their established brands, a clear vision for growth, and a willingness to adapt. But they also need to manage those margins, execute those diversification plans well, and stay ahead of the curve when it comes to consumer trends.
Exactly. The next few quarters, those are going to be crucial for them.
Yeah.
It'll be interesting to see how they navigate all of this. But there's one more piece of the puzzle we need to consider.
What's that?
Their commitment to sustainability.
Ah, yes. Sustainability. It's not just a buzzword anymore. It's a core business principle.
Yeah.
And consumers, they're demanding that companies actually walk the walk.
For sure. And investors are paying attention too. They know that companies that prioritize sustainability, they're better positioned for the long haul. So in the final part of our deep dive, let's look at how Marico is incorporating sustainability into their business strategy.
Intriguing. I'm eager to see how a company with such deep roots in India, but also this growing global presence, is approaching this. Stay tuned, folks, as we uncover Marico's sustainability story in part 3 of the deep dive.
Welcome back to the deep dive. We've covered Marico's financials, their growth strategy, and now let's talk about sustainability.
Yeah, it's a big deal these days.
It's not just a nice to have anymore, it's a must have.
Absolutely. Consumers are demanding it and investors are looking for it. Companies that are doing things the right way.
Marico mentions some of their initiatives in the report, but I want to go beyond the buzzwords. What are they actually doing to make their business more sustainable? It seems like they're approaching it from all angles. Environment, social impact, the whole 9 yards. Their ESG performance snapshot actually gives a good summary.
Okay, let's start with the planet. What are they doing to lessen their environmental impact?
They've made some serious progress in cutting their greenhouse gas emissions. Like, we're talking an 81.67% reduction in emission intensity since, I think it was FY13, their baseline year.
81%. That's not just a step, that's a giant leap. How did they manage that?
One big factor is their shift to renewable energy sources. They're now getting over 74% of their energy, thermal and electrical, from renewables.
So they're literally switching to cleaner fuel for their operations.
Yeah.
But what about water? We all know that's a precious resource, especially in a country like India.
Right. And they're on top of that, too. Their water consumption intensity, it's down 60% from their FY13
So
baseline.
they're being more efficient with their water use. That's good. Anything else on the environmental front?
Well, their packaging stood out to me. They're now at 95.5% recyclable packaging by weight, and they've significantly reduced their use of PVC, which is, as we know, really hard to recycle.
Yeah, packaging waste, that's a huge problem globally. So environmentally, it sounds like they're taking some real action,
Yep.
but sustainability goes beyond just the planet.
Of course. It's about people, too.
Absolutely. And Marico's got initiatives focused on that as well. Their work with farmers through the Parachute Cup of Richa Foundation, that really caught my eye. They've got over like 112,000 farmers involved,
Right.
covering something like 400,000 acres of farmland.
That's a massive program. What's the goal? Are they just, giving away coconut trees?
It's much more than that. They're promoting sustainable farming practices, things that lead to better yields, healthier soil, and a better quality of life for the farmers. They're actually reporting a 17% jump in productivity, it's really impressive. So it's a win-win for everyone. Farmers get better results, Marico gets a more reliable supply, and the environment benefits. That's how you do sustainability. What else are they doing on the social side of things?
Well, they're investing heavily in education through their Nihar Shanti Amla Funwala program. They've reached like 1.4 million students and involved 250,000 teachers just in the 2024-25 financial year.
Education is such a game changer. It's great to see them supporting that.
And then there are the community programs, tree planting, other projects focused on, creating social value. It's a holistic approach, which is what you want to see.
This is all great to hear, but how do we know it's actually making a difference? Are they measuring their impact, holding themselves accountable?
They are. That ESG performance snapshot, it doesn't just list their initiatives. It actually gives specific numbers and targets.
Right.
It's not just talk. They're backing it up with action and results.
That's how you build credibility.
Yeah.
Have they received any, recognition for all this work?
Oh, yeah, a whole bunch of awards. They even got the ICSI Business Responsibility and Sustainability Award for Best Corporate in the Non-Service Sector.
Okay, that's a big one. It sounds like they're raising the bar for the whole industry.
Yeah.
It really proves that a company can be both profitable and sustainable.
Exactly. Marico's story shows that sustainability, it's not just about doing good, it's about doing well by doing good. It strengthens their brand, attracts investors, and resonates with, those consumers who care about these things, which is more and more people these days.
This has been a really eye-opening deep dive into Marico. We've looked at their financials, their growth plans, and now their commitment to sustainability. They're a case study in how to do business right in the 21st century.
Yeah, agreed. It's definitely a company to watch.
That wraps up our deep dive into Marico Ltd. We hope you found it informative and maybe even a little bit inspiring. Remember, as consumers and investors, we have the power to support companies that are trying to make a positive impact. So let's use that power wisely. Until next time, keep learning, keep asking those tough questions, and keep pushing for a better future.